This is our Forex blog from May 12th, 2014. These are our currency indexes, which let you see, as if it's a regular chart, what each individual currency is doing. So you can see the dollar starts off above the hourly moving average here, and it breaks down underneath it, so that means it's weak. It's not super weak because it's not hitting the lower bands, which most of the time causes a counter trend move happening, as you can see here, 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 here. But nonetheless, these let you see what each individual currency is doing, and you can buy the strong currencies if it's on top versus the weak if it's on the bottom, or if the weak currency is on the top, you sell it versus a strong currency that's on the bottom, and that's how you trade. You can also use our FX trade signals study, which tells you when to buy and sell. This is actually one that I use for internal purposes. The one we released just puts an arrow on the chart to buy or sell, and it shows you the same trailing stop you have here. Mine, in addition to that, shows me the trend line off the previous high, tells me what the angle is, trend line off the low. It's a 15-degree up angle. I have sometimes the option of putting in the markers that show the Gann angles. And basically, in a nutshell, if you don't know how to trade, this has probably close to 180 different trade patterns. You can see here is a Gann pattern, which basically is an angle up from, angle up from this low that's steep, and then an angle down from this previous high that's about 23 degrees. When those intersect like that, it tends to find reversals. We have trend line breaks. You know, when the market's trending down, like you can see here, 20-degree slope off the highs, 22-degree slope off the lows. It comes down to the lows and just sitting there and breaks down underneath it. Tends to be a very high probability trade. You know, for people that don't want to learn 100 to 200 different things that you need to know to learn how to trade, you can use our systems. And you can see today it was 100% actually. Bought here, made money, sold here, made very little money, 3 pips. Bought here, made money, sold here, made a little bit of money, and also sold here and made money. It's in a long trade right now, which is a fib retracement. The ones that show up on your chart don't necessarily tell you what the type of trade is, but you can see this is a 62% Fibonacci pullback after the previous trend was quite strong, and it's had a decent amount of time to pull back, but not too much time. There's anywhere from about 8 to maybe 35 different rules in each different pattern. So let me show the euro dollar from Friday. It did absolutely phenomenal on Friday. You can see today Friday's trading systems, and again, this is a very complicated, very complex trading method. Some of them use trend lines. As you can see here, it broke underneath the trend line, came back up and tested it. It also happened to be a Gann angle. We have numerous other trades. This one here was a very huge win, very tiny win, pretty decent sized win. And basically anytime the wins are significantly bigger than the losses, here is a loss, very tiny loss, and you have a very tiny loss right here today too, in a currency that really didn't take off and move anywhere. Just the sophistication of our trading systems is mind-blowing. And one of the studies I might release in the future are these Gann angles, and you know, I really don't have time now to explain all the different methods behind this, but it basically lets you see what various Gann angles are from the highs and the lows, and you can plot them up and down, and price tends to bounce off of these levels, and also at various areas where it intersects. You know, you can see very high probability trades. So our trading system is extremely complex, and it uses trend lines, Gann angles, Fibonacci retracements, Fibonacci profit targets, Fibonacci time extensions, Fibonacci bar extensions. It uses about 45 different areas of support resistance. It uses our statistical tools. Basically, it would take you 3 to 5 years to learn all the stuff that our systems do. And I found it actually easier to learn how to program in C++ and teach a computer to trade than, you know, to teach most people. We did classes every day for 6 years and probably had a 10 or 15% success rate. People don't want to learn all the different things they need, and most people can't look at 20 or 30 different things at once and trade multiple different trading systems all at the same time. And I mean, it is what it is. You know, myself included, I can't watch the close to 75 different indicators with various settings that my trading systems use. And it's all behind the scenes, it's all instantaneous, and it's also, you know, very quick and loading. And who wants to draw all the fibs off of all the different swings, fib targets, fib retracements, convergences of support resistance? I weight different support resistance areas differently, and some trades happen at very high weighted support resistance areas, and other ones happen if there's 2 or 3 support resistance areas all in the same area. Your charts would be so busy if you were to use every good tool that was available to you that your mind wouldn't be able to distinguish what's going on. It would be the most busy, confusing chart possible. And people complained to me back in the day when I tried to simplify my systems that they were too complex. So basically, in a nutshell, get our software, just trade based on what the systems do, and take small losses when you're wrong. And as you can see, it finds big, strong, trending moves. Stay in the trade as long as possible. My exit code has about 16 different rules that sometimes have wide stops, sometimes have tight stops.